Indeed. And tonight we're recording the show down at our studio on Barrington Street, not our studio, but Podstarter Studio. And it is hot out there right now.
I know. It's probably as hot as the real estate market. I don't know if that's a good segue or not. It is certainly great weather here, and I hope that it'll be great weather this weekend or whenever you are listening to us. I hope your weather is good. It's July here in Halifax, and again, we're in downtown Halifax recording. Yeah,
and of course, we'd like to start talking about some of the kind of the news cycle, what's going on in the news cycle, and we've got another Bank of Canada interest rate announcement in, 2 weeks?
2 weeks is right around the corner. Yeah. Now, I'm on the fence, Todd, on what's going to happen on this announcement. I'm not going to make any super predictions this time.
Is that right? Why do you tell me why?
For the last time, I was like, yep, it's definitely
you knew.
Gonna
Everybody knew, so I wasn't really all that impressed.
Everyone knew. I think there were some naysayers, let me tell you. I told people I'd fall on my sword, which I luckily didn't have to do.
Yep.
This time, I'm on the fence. I'll tell you why. The inflation numbers were edging up a little bit, so that's not great news for a reduction. But there are some other key indicators that are pointing towards the rates will go down. So I think there's going to be more news releases over the next week, 10 days that are going to point towards what's going to happen with the Bank of Canada. I think we'll have a better idea by the time the 24th rolls around, which is at the end of this month, and I think we'll see. The rates are going down. I think that's the moral of the story.
Yep.
The question is when and how quickly are they going to continue to soften? And that I don't know.
Yeah, but you said that it's not going to be a big sharp decline. We're going to see
it'll be like another
slow burn, as you described it.
It'll be like
right?
another 25 basis points.
Yeah,
like,
25
that's what
basis
I think.
Points, yeah.
I think it'll either be a 25 basis points reduction or a hold. And I'll challenge our listeners. I'm going to put a poll up on Twitter and on our Instagram on either the 23rd or the 24th prior to the announcement. Maybe the 23rd I'll put it up. And then I want to hear from our listeners what you think is going to happen.
And generally, what's that translate into kind of dollars and cents for people, a 25 basis point drop?
Yeah, again, it's not a big variance. I think last time, we said it's like a couple of percent, actual percentage points that it's going to reduce. I think it was a 3% reduction in people's interest carrying costs. So again, it would be similar. It really depends on what you owe, what your amortization is. It will impact the actual amount of your payment or your amortization. We need to remember that every variable mortgage is different. Some have an adjustable payment, and some have a static payment where the amortization will get shorter when the prime rate goes down. Anybody who has a home equity line of credit, obviously that's going to impact their cost of borrowing right out of the get-go. Yeah. And we also need to remember that every lender doesn't just automatically change their prime rate when the Bank of Canada changes the key overnight rate. Some change it the first of the following month. Some change it, as soon as they can.
Yep.
But it's not usually like an instant update. And we've had some clients reach out that, they were curious. They're like, well, when are we going to see a change? After the first of the month, that's what, for some lenders, that's when it happens.
Is sometimes with a percentage point of a drop like that, is that a deciding factor for somebody to say now is the time I'm going to get into the housing market? Can it be kind of that threshold? I
don't know if like a 3% reduction in the total cost of borrowing is going to make a huge difference. In terms of the numbers, I don't know if that's going to be enough to like move the needle.
Yeah.
But it's a positive news story. And we need positive news right now. With the cost of everything out there, I think having the cost of housing being less, that is positive. That is positive.
Yeah. As far as the cost of housing goes, I was listening to a news report today. I can't remember where I was listening, somewhere anyway. And the cost of buying a house, purchasing a house across the country, I think the number is up 7%, something like that, year over year. I think that was the number that I heard.
Which is pretty amazing considering there's less transactions happening.
Yeah. So what's going on? So
that's not necessarily driven by GTA, GVA. I mean, it is in a sense that their market was just so bad last year that they're starting to see some rebound.
Yep.
But our prices here are continuing to increase.
Did I hear somewhere, and again, I should jot these things down, but that housing is now becoming more expensive in Toronto than it is in New York? Is that? Have you heard anything?
I haven't heard that, but it wouldn't shock me.
Yeah.
And a lot of this has to do with supply. In a lot of areas, and I would say across the country, it's not just Halifax, there's such a lack of supply, and that's what's driving the price up.
Yep.
In any type of market, it doesn't matter what it is, housing or otherwise, it's a supply and demand issue. If we get some more supply, it'll help ease that amount of demand, and it will keep the prices more level. A balanced market really is what we need.
Yeah. Yeah. Are we getting lots of new supply though, or are builders keeping up?
Not yet.
Yeah.
I think we will,
Yeah.
especially
Why do you
with
say that?
with the plan that the federal government has. I think we are going to get a lot more housing come online.
Are you talking with this accelerator fund?
But it's going to take a long time.
Yeah.
Even with deciding you're going to build something today, it's not coming online for 1, 2, 3 years probably.
Mm-hmm.
It takes time between the planning, financing, construction.
Yeah.
Housing just doesn't correct itself overnight.
Yeah.
I think in Halifax, our issues are going to be for 20 years.
Yeah.
And we talk about housing all the time. We have an office over in Dartmouth at 99 Wise Road. That's no secret. And there used to be a hotel connected to our office tower that was leased, for a 3-year period by the province.
Mm-hmm.
And now they've announced even recently in Halifax that they're creating some more sites for those who are unhoused.
Mm-hmm.
It's not, I don't remember this issue 5 years ago.
Mm-hmm.
I think there were always, a few, people, there'd be people that you would see maybe along Spring Garden Road that would be what we would consider unhoused, but it wasn't en masse.
Right.
We didn't see tents, there wasn't that issue. And, I've talked to people that live next door to our office, and, there's people that go to work every day.
Yep.
The issue is they can't find something that they can afford to rent.
Mm-hmm.
And, I think what they can afford is much lower than maybe what the supply is offering.
Right.
Which is tough. And I think we have this perception, maybe as Haligonians or Canadians, that, people that are unhoused, are either, unemployed or have mental health or addictions, but it's not always that
certainly
issue.
not always the case, no. I'm assuming that perhaps you've seen a kind of a cohort of clients in the past that kind of had that threshold of under $100,000 income, but still able to get them into something and find them somewhere to live within the city. That's becoming more and more challenging, if not impossible, right?
It definitely is. Like I had a client today who's an existing client. I'm not going to share their name or their specific situation, but they make under $50,000 a year. They own a home. That home is worth, $400,000 plus, and they want to buy a new home.
Yep.
Well, the challenge is based on your even $50,000 income, you can only really afford a mortgage for $200,000. So there's only so much money to work with. Yeah. And in that case, they need a big down payment to be able to afford, a better home. The good thing, and that's really working for them, is they owe very little on their existing home.
Yep.
And the home that they're in now has doubled, tripled in value.
Mm-hmm.
So they're able to use the equity and put it down as a big down payment, but not everyone is that lucky.
Yep.
They made some good decisions, 10 plus years ago and getting into the housing market. But the challenge is really for me, it's still that first time home buyer. It's breaking into the property ladder is the most challenging thing for borrowers to do.
Okay. So generally the clients who you're seeing are, I'm assuming their income would be what? $100,000+ in order to kind of be in that entry point.
Yeah, I think like the household income for clients that we see is typically $100,000+.
Plus, yeah, okay.
Household. Yeah. I'm not saying on an individual because that would be a high income earner.
Yep.
But I would say as a combined income, typically on our applications we're seeing $100,000 plus. It really depends. For existing homeowners, I would say the average is lower. I think for the new homeowners, those first-time home buyers, we're seeing definitely a higher average household income. It's just a nature, Todd, of where the rates are and where the cost of real estate is right now.
Yeah, and again, back to the rates, that's why a lot of people are looking at these rates. But I don't think we're going to see these historically low rates that we witnessed in before the pandemic.
It's going to be years before we're back to these like pandemic rates, I think.
You think we'll return to that, though?
I think rates are trending down. It's how long is it going to take? I think in 2 years, we're going to have a different conversation than we're having right now. It's going to be a completely different conversation. I did an interview today with another news outlet, and it was really all about mortgage renewals. And clients are just so concerned about the renewals. A lot of that is to do with interest rates. And there's so many misconceptions that there's all these costs and whatever when you move from institution to institution. That's not necessarily the truth. It's really very interesting.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.